All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. Starting off the S&P 500, we can see we are getting quite extended here on the daily time frame. Big rally off of the lows from October. And we talked about this a few weeks ago. The bull-bear ratio at the lows here was around a 43 or 44. It got very low. It's a very low reading for bull-bear ratio, and there simply was just too many bears in the market, too many people trying to short. I had people asking me, can we short here? Can we short here? I said, no, you don't want to short it here because your downside is down to maybe the 200 moving average, which gives you about 5%, and your upside is pretty much unlimited if the market continues to rally. So not a good risk reward here. That's why we waited to really short this market. But as you can see now, we are getting extended. This market's really overbought. We had a really nice October, and you see this upper trend line here on my chart here. This is basically that old topside rising wedge pattern or trend line from really going back to last September, and I had erased it on my chart because it wasn't really relevant recently, but now it's coming back into play, and you can see that's where the market stalled out. We gapped up there and pulled back off of that, putting in a little doji here on the daily on Friday. So there's potentially, I'm seeing potential for a little bit of a pullback here. Market is extended. You can see the VIX creeping up the last couple of days. That is a little bit of protection buying. Now, I don't think it's going to be a major pullback right here. I think the most likely scenario right now is a pullback on the S&P, maybe to that 454 area. Maybe you get down a little bit lower to that 50 moving average. And then I think we probably rally into the end of the year. And then at that point, I think we have to be really cautious. But this market is approaching blow-off territory. So if we don't pull back and we continue just pushing higher, we are at severe risk for a blow-off move here. Look at stocks like NVIDIA. Those big wide range bars like that at the end of a extremely overbought run are indicative of a blow-off. You see the weekly there. Look at the monthly, just an insane move. Tesla, same kind of deal here. Tesla getting into blow-off territory. Look at the weekly and monthly. I mean, just was already having a nice run here, and then just to have that parabolic move at the end, that's indicative of a blow-off move. We see the semiconductors basically, NVIDIA is basically the semiconductors at this point, and they are getting extended as well. We had names like Avis Budget, massive short squeeze on this, which ended up skewing the Dow Transports. Pretty incredible move here for a company like Avis Budget to make a move on the Dow Transports. Like the Dow Transport average, has UPS, FedEx, American Airlines, Boeing, CSX, Norfolk Southern, big name companies in it. And for a company the size of Avis Budget to skew it that much is pretty incredible. And it would have been a joke if the Fed didn't announce tapering, which they did on Wednesday, a day after this short squeeze happened. So things are getting really crazy out here. We are entering blow-off territory, in my opinion. But the market probably can hold up a little bit longer. I think we get a bit of a pullback into next week. The triple Qs, you probably get down to that 383 area, maybe to this mid-trend line here that I have drawn on the chart. So around 380. And then I think we get one last rally towards the end of the year. But if that pullback doesn't happen and we continue higher, then I think we have a blow-off much sooner than that. But that is it for the equity markets. Just taking a look here at yields. So yields get hit a little bit. Again, this could also be a bit of protection buying, moving into treasuries a little bit as the markets get really extended. So maybe some fund managers preparing for a pullback. Notice how the last 2 days we had a surge in treasuries, which also coincided with the last 2 days on the VIX. So perhaps a little bit of protection being bought there. Let's take a look at crude here. So crude hit my $85 level. I've been talking about that for really weeks now, probably months. And I said, 85 is going to be resistance for a minor pullback. And that's exactly what we're seeing. This isn't, a major robust pullback, but we probably get down to that $77 handle. If we take a look at the weekly time frame, you see the pivot high here, and then you have the weekly 20 MA upsloping in the mid 70s. So I would see max downside for now, probably in that range, unless the market really reverses and rolls over, then that could cause a major pullback. But outside of that, your big level, I think, for crude is up to that $90 area. This is where you broke down. You had a pivot low right in there, 90, nice whole round number. But that's where I would look to really, call a major resistance on crude. So let's take a look at nat gas as well. So nat gas still just kind of backing and filling, chopping around. Hasn't really broken one way or another, but it is starting to form kind of a triangular pattern here. So you notice we've got like higher lows and lower highs. So whichever way this breaks could determine the direction for nat gas over the next couple of months. But for right now, it is holding up, and there's not much else to it. If it wants to get through 650 again, it's got to consolidate a little bit more. But if it loses this lower area here and you take out this pivot, it could go down to maybe 425 and possibly lower if the market really rolls over. But again, the fundamentals for nat gas right now are very good. It's just that there is a lot of news that I believe is priced in regarding the winter and the heating situation. So let's move on to the dollar index. So again, dollar having a nice week. We talked about this thrust that we had last, I believe, Friday, and just a little bit of consolidation this week, pop on Thursday, and then we did test this upper area 94.65, pulled back a little bit. I don't think the dollar is ready to break out yet, but this weekly pattern is still looking good. You're inside of this big green candle here, so this is bullish consolidation, and the dollar gets through that, it's probably headed up to that 97 handle. So that is, the dollar is looking good. Now I saw a lot of questions on Twitter and people who, really should know better. But if you've been following me for a while, I've been talking about this for a while, and that gold and the dollar can move up in tandem. It has happened before, and it will happen again. A lot of people seem confused by that, and I'm not really sure why, but essentially what that means is risk off. When you see that happening, you see the dollar and gold moving higher together, it's an indication of risk off. It's a move to safety, essentially. So we've had that happen the last couple of days. Again, yields moving up a little bit, the VIX moving up a little bit, dollar moving up a little bit, gold moving up a little bit. So there's some protection buying going on, in my opinion. Now, regarding gold, we finally got through that 1811 area. So gold, it's going to have a little bit of a hurdle around 1840, but it probably makes a move up to 1870, 1880. So gold is looking good. I love what the GDX did this week. You had a pullback, nice little buy candle. Then you reversed. You had a gap up and reversal on Thursday, but you erased that on Friday. So nice move for GDX. GDXJ, same thing. Sandstorm reported earnings this week, market liking that. So nice little pullback pattern there for Sandstorm. Wheaton reports, I believe, on Tuesday. So we'll keep an eye out for that. And silver holding up as well. Nice little pop here and a pullback, and potentially, it hasn't triggered yet, but potentially you could make a case for inverse head and shoulders here. If it can trigger that, close above 25, that could be a huge juice for silver. So your target here, just really quickly, about 21.40. Yeah, we'll call it about $4. So if it breaks up, you could see it move up to $29. So that's a pretty big pattern there for silver. SILJ also holding up as well. First Majestic reported last week, and Pan American reports this week as well. So a lot of the mining companies are reporting, and you can see the similar kind of pattern here, the inverse head and shoulders here on Pan American even. So metals shaping up much, much better now than previously. Platinum as well. Nice little uptrend there holding that. And palladium may be breaking out of this little kind of flag pattern that we talked about last week, but we need to see a little bit more upside. Close above that 50 moving average would probably bring you up to 2,200. So nice move there. And one last thing about gold I want to point out. I think I have pointed this out before, but notice how last year we started just making lower lows and pulling back. Now we're making a series of higher lows. So just to simplify the chart a little bit, gold is just putting in higher lows, and the trend is starting to curl back up. So I do like the metals much, much more. You guys know over the last couple of months, I haven't been exactly super excited about them, but they are shaping up much better as of late. So I just want to talk quickly about some of these potash stocks. So Intrepid, let's go over that really quick. So this has had a nice little breakout move, a little bit of a pullback here, and just kind of pulling back off the highs. It did get very extended and overbought. But nice breakout of this long consolidation pattern. So these potash stocks could be on the move here. That was a pretty big dump on the weekly chart. But again, taking a look at the monthly, these things have been beat down for a long time. And kind of like uranium, they put in that capitulation low in March, and they've been kind of trending up ever since. So you see Intrepid here hugging that 100-week moving average right now. There is quite a bit of resistance overhead with all these red bars here, but some consolidation will push this higher, and eventually this thing could back test $100. If we look at Mosaic, same kind of deal. But Mosaic in much better shape here, hitting that 200-week moving average, and this thing will have resistance around $47. But again, little consolidation can push it up through that, but it has had a nice run. So these potash plays are looking to be on breakout here. A little bit of a pullback, obviously, over the last week or so, but they are shaping up much, much better. And speaking of uranium, let's look at CCJ. So CCJ has actually popped really nicely. I thought they'd have to do a little bit more consolidation. It probably still does, but it got a nice pop off that 20 moving average. Now, if we look here on the monthly time frame, it's going to have some resistance around $30. In fact, if we look at the weekly, let me just pull this back a bit further. Bear with me. Yeah. Sorry, there we go. Weekly time frame. So this is where you broke down. You had this major gap down back in 2010, and that's going to be kind of a resistance area. But for right now, CCJ is really holding up. It is quite overbought on the weekly time frame, but it's trending higher. And I thought it would have to do a little bit more backing and filling. It probably will eventually. If this continues higher, it's going to have a sharp pullback. But uranium's still looking very good. Same thing with Denison. Denison will have resistance at about $3. So you've got this big red bar here. That's where you started to rally and then you reversed. So you're going to have resistance in that range. But these uranium plays are holding up really well right now. I actually like the chart of Denison a little bit better than CCJ, honestly. It's a little less extended overall. I like the consolidation pattern on Denison better. You see how you consolidated sideways, whereas CCJ kind of just trended higher. Not really as much consolidation to give it a springboard, so to say. But in any case, I'm just going to leave it at that this week. So we have earnings wrapped up. We have the tapering effect going on. So we'll see how the markets respond to that. Obviously, we've had a really robust move here, but sometimes it takes a while for the markets to shake things out. But in any case, take care. I will talk to you next week. Thanks.